Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, August 23rd at about 2:15 p.m. Eastern. Well, today, speaking from Jackson Hole, Wyoming, Federal Reserve Chair Jerome Powell gave an explicit endorsement of interest rate cuts, saying further cooling in the job market would be unwelcome and expressing confidence that inflation was within reach of the U.S. Central Bank's 2% target. While Powell said the jump of nearly a percentage point in the unemployment rate over the past year was due largely to rising labor supply and slowed hiring, he was also emphatic that the Fed wanted to prevent any further erosion in the labor market. And on that certainly good news, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $560.47. It is now, after that boom down on August 5th, it is back up above the 20-day moving average, the 50-day moving average, the green line. It is down very, very slightly from its all-time highs. Its all-time closing high on 564.86 on July. That was on July 16th. That was the all-time closing high, 564.86. So that's what we're looking to get over. Now, after making that all-time high, we know that the SPY rolled over. It dropped below its 20-day moving average, which had been holding it up for quite a while, acting as a trend line. Then it went sideways for a couple of days, then fell down below its 50-day moving average, walked along the green line for a few days. Then down here on August 2nd, it dropped down to open at $535.75. And it couldn't hang. It hung there for one day and then gapped down again to the August 5th. It opened at $511.64. And certainly that's a day many of us are going to remember. That August 5th drop was very, very hectic. That was quite a day. Now, however, but we can say for the past 3 weeks, the SPY has rebounded dramatically. Back above the 20-day, the red line, back above the 50-day, the green line, to where we are right now, again at 560.47. And that's about 56.04 on the S&P 500 itself. Now, as we look up here, again at 560 and change, we know that the SPY is pushing up against this prior all-time closing high at, we'll call it 565 to make it easy. So we've got this closing high up here exerting pressure and certainly resistance on the price going forward. The last week we've been kind of like, okay, and making a run up this far is pretty, and at this pace is a darn dramatic one. So, and it's a good thing. So the SPY can't yet go over that we'll call it 565. It hasn't gotten over that yet. It is going sideways. As far as support goes, we can see the 50-day moving average down here. March-April support, where is that? That's down a little lower. So yeah, so we see the 50-day moving average here at coming in at $547.20. So call that 547. We see the 20-day moving average coming in here at 542.86. So call it 543. There's also potential price support right there. So that price support and a moving average, two things in the same place. That's a good potential support. And then, of course, we have the pivot low down here. The low that day was at 510. So that could be potential support. Hopefully it doesn't go that low. We don't need it, but we'll see. And then, of course, we've got the 200-day moving average coming here at $508.41. So I'll just say 508. So quite a bit of potential support all the way down here. should the SPI need to take a break, pull into a rest stop, as I like to say. Typically, the last couple of weeks of August are very, very slow, and typically volume is reasonably low. So, and August and September can be, we can call them exciting months. So, anyway, today the market it moved up, gapped up a tiny bit from yesterday's close, and then has basically went up and then going sideways. So we will see what happens. Okay. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100, and that's made up of the top the top 100 non-financial stocks in the NASDAQ stock market. Of course, the NASDAQ 100 is home to momentum stocks like NVIDIA, Meta, Apple, Microsoft, that whole group. NVIDIA is coming out with earnings next week. That'll be wild. So when I captured this chart today, the QQQ was sitting right on top of the 50-day moving average, the green line. Today the Qs were trading at 478.95, so almost 499, sitting right atop the green line again, which is coming in at 474.65. So just right atop that. And this is 5% below the all-time closing high on July 10th, which came in at $502.96, right up here. So that's the all-time high, 502.96. Now, after making that high, we know that the Qs rolled over, dropped below the 20-day moving average, tried to regain but couldn't get back above it. You know, what was support many times becomes resistance if price falls below it. So fell below the 20-day, the red line, couldn't get back through it, fell below the 50-day. Look how it tried to pump through back that, but it couldn't do it. That 50-day acted as a ceiling. Then it dropped back down to August 2nd to open at $450.89 right here. It gapped down. It couldn't hang, just like the SPY couldn't on that day. Then it gapped down on August 5th to open at 424.71, and it actually dropped to open below the 200-day moving average, which is many times considered a big deal. But to its credit, the Qs rebounded, rallied from there, and then for the next 3 weeks, came back through the 20-day, came back through and above the 50-day, which is at about 475, to where we are now, again, at 478.95. So we have potential resistance here. At 486. Then we can go a little higher here to that, just a little bit higher to that prior resistance in July at 488. And then again, of course, we can go up back to the all-time high back here, which was at about 503. Now for support here, nearby, of course, we have the 50-day moving average, again, coming in at 474.65. Then price support back down here at the 20-day moving average at 461, and potential price support down here at 455. The 20-day the 200-day is down here at 437.39, so 437. And then we have down here the August 5th low, which came in at 424. The August 5th low did, and April lows down here at 413. So just like the SPY, a lot of potential price support from the moving averages and from price should the QQQs need to roll over here and take a little summer rest. If it does pull back in the next week or so, fingers crossed for me anyway, that stays above our 455, 460 level. I want it to not go much lower than this area from my lips to the Q's ears, right? Okay. All right, so keep an eye on that, and we'll keep going. Our third chart today is a daily chart. We haven't looked at this in a long time, of the Van Eck Agribusiness ETF, symbol MOO, so we will call it the MOO. I've been watching this. The MOO has 23 holdings. Top holdings include Zoetis, Deere, John Deere, you know it, Bayer, AG, Archer Daniels Midland, Tyson Food, that whole group. So I've been looking at that. This doesn't fall in the spotlight very often, and I sometimes like to go where nobody else is so that I get there first. So hopefully this plays out. Now you can't see it on this chart, but the MOO had all-time highs in 2022, in April of 2022, actually at $109.19. That was all-time highs. You can't see it on this chart. Now the MOO rallied dramatically in 2020 and 2021, as you know, and got up to that 2022 high at 109. Then it just gradually drifted lower because it went pretty much straight up in a couple of years, and then gradually drifted lower down to the nearby low we're looking here, and that was the August 5th low. Everybody had an August 5th low. It came down here to $67.57. Now from this low, again about 3 weeks ago, it rallied up very quickly, as you can see, rallied up, jumped above the 50 and the 20-day moving average, which we're coming in now at about the same place. The 50-day here is coming in at $70.68, and the 20-day is coming in at $70.84. So pretty much in the same place here. So it rallied up above those two moving averages very fast, then moved back up here to over 71, traded below. This is the 200-day moving average coming in. You can see how strong it is. Acting as a ceiling. It has been strong, acting as a ceiling, certainly in July for the MOO, then started leveling off. And please know that level moving averages like this provide less resistance than do falling moving averages, which provide more resistance. Anyway, so the MOO today managed to jump up. It's been consolidating for a week under the 200-day. It managed to jump up and go through that 200-day moving average. And again, right now it's trading at $72.98. It looks like it could be breaking out here. I saw a lot more volume come in, and this is not a day trading. This is not a day trading ETF. This is something a little quieter. But I saw the volume coming in the end of July, the 1st of August, as the MOO fell. Then I watched it start back up on average volume, and then if you back up a little bit, you can see there's stronger volume coming in the last couple of days. So again, it rallied to where it is now at $72.98 above the 200-day moving average. And again, it looks to me like it could be breaking out here. So if in the coming week the MOO can remain above the 50-day moving average, again, the 50-day moving average is coming in at $70.68. You can call it 71 if it makes it easier. If it can remain above the 50-day moving average, I will add a small position of the MOO to my trading portfolio. I'm going to put a stop down here below the 50-day, pretty close, below the 50-day at $70.40. Then, if and when the MOO can rise up above, see this prior high, if I can draw a straight line, if it can move above $75.75, that's a little bit above this high. If it can move, well, it should be a little higher up here, but if it can move above $75.75, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the MOO in the coming week. And now, check out this news from ToniTurner.com. Please know that we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to Swing Trade Successfully is one of my favorites. It shows you how to enter during upswings, grab the sweet spot from the price move, and takes profits before the move gets tired. You'll learn my powerful sleeping tiger setup. I've traded it successfully for years and years, and I've taught it to thousands of traders. Our new discounted price for this online program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts, pretty cool, or Metastock real-time charts for free. From our ever-popular 7 steps to successful trading, you will also see how to swing trade successfully. All of these are discounted now. How to trade the trend to profits, how to read charts, 3 winning setups, bottom fish like a pro, and we have more. So find out how these timeless online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen or simply click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is the Market